All right, let's talk about SoFi. This is one of those stocks you'd be hard-pressed to find one that splits the room more. Seriously, depending on who you ask, it's either the absolute future of banking or it's a tech bubble relic that's about to get vaporized. So what's the real story here? Let's dig in. The whole debate really boils down to this. You've got the bulls, and they're looking at a company that is just firing on all cylinders. We're talking record growth and customers with amazing credit. But then the bears look at the exact same company, and all they see is one giant number, a valuation that is just way up in the stratosphere. So, is this a premium company, or is it just a premium price tag? Okay, before we get into the weeds, I have to put up a big flashing sign. Look, this is not financial advice. I'm not telling you to buy or sell anything. Think of this as an educational autopsy. We're dissecting a company that is priced for absolute perfection. We're just here to understand the business, not to gamble. What you do with your money, well, that's your business and your problem. Got it? Good. To really get what's going on, we have to understand what SoFi is today. If the picture in your head is still that student loan company from back in 2011, you're about a decade behind. The modern SoFi is more like a financial Swiss Army knife. It's basically a three-part machine. First, you've got lending. That's the original moneymaker, personal loans, student loans, and home loans. Second, there's the financial services side. This is your modern banking app with the whole shebang, checking, savings, investing, and credit cards. And third, and this is kind of a secret weapon, you have the tech platform, Galileo. It's basically the Intel inside for a huge chunk of the Fintech world. So now that we know how the machine works, let's look at the bull case. Why are some investors so convinced that SoFi is building this unshakable fortress that could be the next JP Morgan? Well, it really comes down to three main reasons. First up, and this one is the absolute game changer, the bank charter. You have to think of this thing like a cheat code in a video game. Most other fintechs have to go out and buy their funding on the open market, and that gets expensive. But ever since 2022, SoFi basically owns its entire supply chain. It can fund its own loans with its own members' cheap, stable deposits. It's a massive advantage. And here's the proof in the pudding. Because their cost of money is so low, their profit on every loan, what the pros call net interest margin or NIM, is a super healthy 5.84%. This right here is the engine that drives their profitability. Pillar number two for the bulls is who they're lending to. SoFi goes after a very specific group they call HENWS. That's high earners, not well served. Just picture it. A 35-year-old software engineer who makes over 150 grand a year and has a fantastic credit score. That person is SoFi's dream customer. And this is where that strategy really shines. While national delinquency rates on student loans are soaring past 12%, SoFi's high-earning customers are holding rock steady. Their delinquencies are a tiny fraction of that, just 0.43%. It's not even close. Their credit quality is absolutely pristine. The third piece of the puzzle is their flywheel, or I like this analogy way better. It's the Costco Hot Dog strategy. Think about it. Costco gets you in the door with a $1.50 hot dog, right? Well, SoFi gets you in the door with, say, a high-yield savings account. Once you're inside their ecosystem, they can sell you every other product they have, super efficiently. It's brilliant. Okay, that all sounds amazing, right? Unstoppable. So why isn't everybody just piling their life savings into this stock? Let's flip the coin and look at the bear case and see why some people think this fortress could actually be a house of cards. The bear case, honestly, pretty much starts and ends with one single thing: valuation. The company might be a Ferrari, no doubt, but the market is charging space shuttle prices for it. All that good news we just talked about, the bears say, yeah, we know it's already more than baked into the stock price. And the numbers don't lie. SoFi is trading at a price-to-sales ratio of almost 11. Compare that to its fintech peers. You have Block at 1.8 and PayPal at 2.4. SoFi is being priced at a massive premium to pretty much everyone else out there. But here's the other big worry for the bears. It's a question the market has never had to answer. That whole bull case we talked about is built on the financial strength of their high-earning customer, Chad. But what happens to this beautiful model if Chad gets a pink slip? And that is the absolute crux of it. SoFi's model has proven it can handle an inflation crisis that hits lower earners. What it has not been tested by ever is a severe white-collar recession, the kind where all those software engineers and other high earners start facing widespread layoffs. That is the great big unknown. So let's bring it all home. What do you get when you combine a company that is executing brilliantly with a stock price that already expects that brilliance to continue forever without a single hiccup? you get a company that is, in a nutshell, priced for perfection. This right here is the fundamental tug of war for anyone looking at SoFi today. On one hand, you have a company that is doing everything right. It's got the bank charter, the sticky ecosystem, and the best customers you could ask for. But on the other hand, there's the reality. The market knows all of this and has priced the stock accordingly, leaving almost zero room for error. So instead of a simple buy or sell, this is really a watch. And if you're going to watch it, here are the vital signs you need to keep an eye on. If those pristine delinquency numbers start to creep up, say past 1%, that's a huge red flag. If that incredible deposit growth starts to slow down, their cheap funding cheat code is in big trouble. And of course, you have to watch the price itself. So we're left with this huge billion-dollar question. Is SoFi's premium price totally justified because it really is the future of banking? Or is it a fantastically run company that's just caught in a valuation bubble that is waiting for a pin? That right there is the question you have to answer.